heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Microsoft and Meta results drag the market lower. We'll take a deep dive into how the AI story is playing out for them.
And DoorDash posts its first operating profit since the pandemic as it grows outside restaurant deliveries. We speak to the CFO.
And we will sit down with Greylock partner and LinkedIn co-founder Reid Hoffman to discuss the impact of the election on Silicon Valley. But first, we check in on these markets that are to the downside. The Nasdaq, as I shine a light, off by more than 2%. Of course, this is as the earnings come thick, come fast, and Ed's going to be describing some of the key point contributors to the downside. But I highlight Uber, one of the latest ones out this morning, down the most in 2 years. Why? Gross bookings just not as high as market had wanted to see. We're seeing $41 billion for their quarter just reported, but the market wanted to see higher, and they wanted a better forecast as well. Is it being crimped back by perhaps a slightly slower growth in the United States? We're seeing California and New Jersey perhaps pushed back a little bit by the cost of insurance, for example, but also there's an FX headwind that's happening, even though we saw record operating profit, Ed. So Uber to the downside. What else are you watching on the micro basis?
Yeah, emphasis on forecasts when it comes to the mega caps and members of the Mag 7 that reported. Meta narrowly beat in the quarter gone on the advertising business, but it's warning of greater losses in Reality Labs as it continues to invest in AI and capital expenditures growth into 2025. Microsoft, a similar story. In fact, the stock's down by the most, or on track to be dropped by the most, since October of 2022. Azure growth in the next 3-month period will be 31 to 32%, but that's a decline sequentially from the 34% in the quarter just gone. Unbelievably, they're saying that they're supply constrained or capacity constrained on the data center side. In other words, they don't have the compute capacity needed to meet the demand that's out there for AI, which is like a really fascinating predicament to be in there, but also record spending, right, in the quarter just gone. The themes are quite consistent, Caro.
The themes are, and so is the movement across most of the market. Let's bring in Bloomberg's Jess Menton, who helps really focus in on a drag lower for the Nasdaq, and all eyes really have been on AI capacity and AI spending.
That's right, and especially with Microsoft, because they've ramped up so much spending, and especially I know you cover the data centers focus as well, because that's not something typically a company like Microsoft would have done, say, before 2020, but especially if you think about, say, utility stocks that have been taken off, those types of tied to the data center business. But that's really where it is when you're thinking about the CapEx spending, not just for Microsoft, but when it comes to these other companies too, because even, say, if you're looking over at Meta, Mark Zuckerberg made it clear they're still going to keep up that spending for AI, even though you're starting to see not as quite of a boost there to when it comes to sales tied to those types of AI losses there. But also when you're thinking about, we still have an NVIDIA coming up, it's still a few weeks away, so it's November 20th. But when you think about its core key clients here when it comes to AI spending and what it means, I mean, they're all reporting this week. So we already heard from Alphabet. Obviously, we had Microsoft and, of course, Meta, and then we'll have Amazon after the bell. But with them ramping up spending, that obviously is going to bode well for NVIDIA. And when you think about nearly half of its revenue growth when it comes to those types of data centers.
Jess, let me jump in here, though. Really interesting. We're showing NVIDIA's down 4% or more than.
Right.
NVIDIA, right? And what's so interesting is that second biggest points drag on the NASDAQ 100. And maybe the logic here is that Microsoft, one of the biggest buyers of NVIDIA's chips along with Meta, their growth outlooks are disappointing. So even though they're both saying we are committed to spending on AI, if they can't sustain the growth that investors want to see in response to that, maybe those plans change. I just think that's so interesting to see that name down significantly, despite its biggest customers saying, yeah, we're going to spend money on them, no worries.
Well, a lot of that also has to do because the lingering concerns about the Blackwell chips, and especially when you think of product delays and its long-term growth prospects. So a lot of that really is tied there to your point as far as what that means. And as far as how long can some of these companies continue to ramp up that spending, because we normally haven't seen that, like I mentioned, when it comes to something like Microsoft.
Astonishing gains going into earnings. It's an amazing and interesting market session, and we have Bloomberg's Jess Menton. We're grateful for it. Thank you. Let's get the sell-side reaction and bring in Shweta Kajuria, Managing Director for Global Internet at Wolfe Research. And I think we've got to start with Meta. It's a really interesting company to understand because beaten the quarter gone, the social media advertising-supported business. Reality Labs will see greater losses. Capital expenditures will continue to grow. I've got a really big sense of deja vu. I don't know about you, Shweta, but what was your takeaway from that?
Yeah, well, first of all, thanks for having me, Ed. It's good to be here. My takeaway was that there are a lot of good things that are going on for Meta. And if we think about at a high level, yes, on the negative side, CapEx remains unclear. They'll probably spend maybe $50 to $60 billion in CapEx next year. We'll see when they guide, but that's a pretty big number. And the losses in Reality Labs, certainly to your point, is a concern. But on the flip side, what they're doing in terms of how they are leveraging Llama, which I believe is a stroke of genius on their part, to their own advantage, is amazing, especially as we think about engagement and monetization. Video recommendations alone are driving mid to high single-digit percentage growth on time spent. Impression growths are high single digits. Pricing is improving 11% for them. And Meta AI already has 500 million MAUs. And so the engagement on the platform is remarkable. And what they're trying to do is continue to be able to monetize on a go-forward basis. So we expect their revenue growth to be sustained at, call it mid-teens growth rate, even at current levels. And they are probably one of the biggest beneficiaries of deploying AI for their own advantage.
I mean, that 500 million monthly active users of Meta AI was arresting. But what arrested the market was the 2025 promise to spend. Just take a listen to what Mark Zuckerberg said on the call.
First, it's clear that there are a lot of new opportunities to use new AI advances to accelerate our core business that should have strong ROI over the next few years. So I think we should invest more there. And second, our AI investments continue to require serious infrastructure, and I expect to continue investing significantly there too.
So in your note, Shweta, you talk about the new opportunities, the new revenue avenues that we're going to see. What are they? Articulate that for the market.
Sure. Well, in the near to midterm, it is leveraging these AI, the AI models and Llama to their own advantage around engagement and monetization. So they're making their recommendations better. An example would be unified videos. They're making a full screen video on their platforms across their apps, and that's going to drive engagement because it's live videos, short form videos, differentiated videos, all on one platform on a full screen. And that itself has opportunity to increase supply in terms of ad impressions in that format. In addition to that, they're using AI to make those recommendations more targeted. And they have not really untapped that opportunity as much. Advantage Plus is what grew their growth in 2024. In 2025, it's most likely going to be video recommendation platform and their video feed that will probably drive their advertising growth. In the mid to long term, there are several other revenue sources that they never had before. For example, business-to-business messaging on WhatsApp. That's probably 2 years out, but they're already monetizing that. And then beyond 2 years, Meta AI, in terms of adding advertising to their search feeds on Meta AI, in addition to subscription, just like ChatGPT or Gemini, are completely new revenue sources for them.
And they continue to see early surprise success with Ray-Ban Metas, the glasses. Shweta, you do not cover Microsoft, but you do follow Alphabet, the parent of Google, and Amazon that reports after the bell. And in the context of cloud, I look at what Alphabet said, and last night Microsoft, both seeming to suggest that the number 3 and 2 players took market share from AWS, Amazon, the number 1 player. Do you go into Amazon's earnings tonight with that analysis as well?
Absolutely. I mean, the top 3 players in the market are Amazon's AWS, Azure, and Google Cloud. What we also saw with Google Cloud, because I do cover it, is 35% cloud growth rate, and in part driven by them not only gaining share, but also part of expanding market TAM, which is their AI services and products are really driving that growth. If we look at their 10Q and the backlog, the demand trends that they're seeing are pretty amazing. So going into Amazon's print, our expectation is that Amazon's AWS cloud revenue likely grew 20 to 21%, and the street's looking for 19% growth rate. That's our expectation, and we expect that to accelerate in the fourth quarter.
You have an outperform rating on Amazon. All eyes on that after the bell. Shweta Kajuria, great to have you of Wolf Research. Coming up, DoorDash marks a major milestone since launching its IPO. The CFO, Ravi Inakonda, joins us next. This is Bloomberg Technology. Time now for Talking Tech. First up, it's official. The EU is investigating e-commerce platform Temu for potentially violating the Digital Services Act. Now, the Commission suspects that the company is not doing enough to combat sales of illegal products on its site. Meanwhile, Elon Musk was sued by the Philadelphia District Attorney over his political action committee's $1 million a day sweepstakes targeting swing state voters. Now, the DA is asking a state court to stop Musk from engaging in what it calls an unlawful lottery. And Peloton has tapped Ford executive Peter Stern as its new CEO. The fitness brand has struggled to boost profitability since the pandemic. Ford hired Stern last year to run a newly created technology-focused division of the automaker. Ed.
Okay, DoorDash has topped Wall Street expectations in nearly every key metric this earnings season, seeing its first quarterly operating profit since the start of the pandemic, generating $107 million in operating income. And really, it's a story about an app or platform that's shifted from restaurant deliveries to so much more. DoorDash CFO Ravi Inakonda is with us here in San Francisco. Let's just focus on the future.
Sure.
So that was the story, right? That what's happening is success in other business lines. But so many are interested about this long-term future of DoorDash. You hinted there would be long-term investments in new areas. What are they?
Sure. We started our business with restaurants as the core focus, but today we are so much more than restaurants. Consumers have hit an all-time high. More consumers are ordering from more categories. It's grocery, it's retail, it's Halloween costumes. We are partnering with every single store in your local neighborhood. Our goal is to be your local neighborhood superstore.
Which areas are the most profitable, potentially, business lines for the app?
The overall business has been GAAP profitable now for the first time as a public company. The way we think about it is we are trying to build scale. In our business, scale is the most important thing because scale drives efficiency, which ultimately drives profitability in the business. If you look at our restaurants business, that has been profitable for a few years. We're taking the profitability and building our new categories business as well as our international business.
Let's just talk about international, because you made acquisitions there. And I'm interested as to how the consumers stack up US versus international consumer right now, Ravi.
International is seeing very good and strong growth. The growth has been substantially faster than peers. We're gaining share virtually in every country that we operate in. All of that is being driven by the underlying product innovation. Users are growing, order frequency is growing. We launched Volt Plus, our subscription program in the international markets, and that's off to a flying start.
What's interesting is you're doing partnerships. Here in the US, it's with Lyft. How integral is that sort of a partnership for growing your user base, which, of course, your CEO is saying you're still only a single-digit fraction of the overall restaurant industry?
We're excited by the partnership with Lyft. We think it's an opportunity for us to make DashPass even more valuable. We have over 18 million plus subscribers that have saved over $10 billion globally. Partnerships like this make it a little bit more attractive, help our consumers save even more. But the core focus continues to be to improve the platform. That's where we see still the majority of the growth for us.
You know, Ravi, combining ride-hailing with delivery of food and groceries sounds a lot like what Uber does. But there's an interesting analysis to be done of why you're thriving. But Uber also printed results that showed the consumer is a little bit tepid right now in the ride-hailing context. In this gig economy world, why is it that you're succeeding in the here and now?
We're so much more than restaurants. I'll give you a small example. Just a couple of months ago, we were running late for back to school. We used DoorDash for back to school supplies for both of our kids.
Okay.
We want to take away the worry of having a to-do list. We want DoorDash to be your local commerce to-do list. Local commerce is a large opportunity. Delivery is the most frequent use case. People eat at local stores. People order from local stores more than any other activity. And we are the leaders in that space. We are providing selection. We're bringing the best of local neighborhoods to your doorstep.
Let's just talk a little bit more about the geography of where you want to be expanding. I mean, is it about spending power or geography when it comes to a deal like the one that we see with Lyft? And how do you then extrapolate that to potentially international geography growth as well?
We operate in over 30 countries. And the interesting thing is, even in all the countries that we operate in, we're not in all the cities. Our focus continues to be to build the best product possible, not just for consumers, but merchants as well as dashers. We just announced a product suite called Commerce Platform for our merchants, which continues to do really well. Even in the US, we are the fastest growing from a grocery perspective. We're gaining share compared to peers. Our goal is to expand to all things within local commerce, within all the countries that we operate in.
You're a technology company, and you just talked about your business. Why? Give me one reason why it helps you stand out, what you're very good at that maybe others aren't.
There are three legs to the stool of growth that we think about. It's selection, it's quality, it's affordability. It's not one or the other. It's a combination of all three things that consumers are looking and asking for. And we're driving same-store sales growth for merchants. Over 7 million dashers have dashed with us in the last year, earning over $15 billion. And we are the fastest growing from an overall consumer footprint perspective as well.
Ravi, we want to thank you for coming in, spelling out the earnings and the potential. DoorDash CFO, Ravi Inukonda there. Meanwhile, coming up, we're going to be speaking with the Twilio CEO, coming up next on the heels of the company's quarterly earnings report. Ed, what are you looking at in terms of earnings?
So, really quick check on eBay. Stock down more than 8%. A familiar story. The forecast for that key holiday period was lackluster. And, you know, I think it's an interesting one because we're just talking about DoorDash and Uber and this key final 3 months of the year. Everyone is giving us different signals about consumer behavior, but investors do not like what eBay is saying about its marketplace and platform. We'll keep tracking it. This is Bloomberg Technology. Cloud communications player Twilio's third quarter earnings beat Wall Street estimates, and the company's now raised its full year revenue outlook. Here with more, Twilio CEO Khozema Shipchandler. Turnaround plan seems to be working. Margins are improving. There's been this, call it a restructuring, since you came in as CEO or jumped to CEO. Which bit is working best?
Yeah, I wouldn't call it a restructuring. I would say it's steady progress, really good financial discipline, operating rigor, a lot of innovation focus. And I think what you're starting to see is that show up in terms of accelerated growth. And I think increasingly we're starting to become a beneficiary of this AI wave.
Let's expand on the innovation part. The
Please.
Backstory, you know, with Twilio was investors who really want to see sort of discipline and a growth plan. But you're doing things in the world of technology that matter.
Yeah, I mean, I think you're starting to see margins really improve over the last several years, which I think has been exciting for investors, certainly been exciting for us. I think on top of that, though, we've also seen a real return to innovation. So we're making some really focused bets in terms of where that innovation lies. And for us, it's really about delivering for consumers vis-a-vis our customers personalization at scale. And what that really means is how do we combine communications plus contextual data plus AI to deliver these amazing consumer experiences through digital interaction.
Khozema, the magic of television, your IFB's popped out. Feel free to pop it back in, and I'll point out that a lot of the sell-side analysts have raised price targets on this idea. I think they see a clearer future. Just very quick, so I want Kara to come in. Do you think that's fair? There's a clearer, longer-term path for you?
Yeah, I do think so. I mean, I think we feel pretty optimistic about our long-term growth ambitions. Obviously, we want to balance our ability to grow the company as well as drive ongoing profitability and free cash flow. And finding that balance really is the trick. But as I look out and see what's happening in sort of this age of AI, I think we're going to be one of the real beneficiaries.
Let's talk about monetizing that AI, Khozema, if you can hear me well, because Morgan Stanley says, look, it's encouraging with this AI product integration, but they want to see the monetization. How do you turn that on?
I mean, I think the way that it happens is that we've got this great data asset that we bought several years ago in Segment. And on kind of a standalone basis, it's a relatively small piece of our revenue. But the long-term play here is that What Segment does is extract contextual data out of the businesses that we serve, and our ability to combine that with communications capabilities and then use a little bit of AI to create that awesome consumer outcome on the other side. Like, that's really what we're going for. And what it kind of means is that whether it's you, whether it's the two of us, or whether it's thousands of other consumers all at the same time, us being able to achieve that personalization as if a business knows every single thing about us in the way that they interact with us. That's what we unlock.
It's really interesting you bring up that Segment part, because that was the area of the business that activist investors wanted you to shirk, to sell off. There is still some weakness within it. Are you standing by the decision to keep it as part of Twilio, and how do you tell that story going forward?
Yeah, I mean, look, I think we've made progress in that business. We made a number of commitments at the start of the year in terms of what we intended to do to improve the ongoing performance of that business. We're very much on track to get that business to break even. We've made a number of improvements in the go-to-market capacity of that business. It's not like our work is done yet. It still kind of continues apace. Again, I think it's important to remember that it's really less than 7% of our revenues overall. And so when you consider it in the totality of Twilio, the business growth is reaccelerating. The margins have been fantastic. Free cash flows have been activating. And now Segment really becomes an activation engine for AI using data and communications.
Khozema, the stock is up 15%, on track for its biggest jump since 2022, at one point, biggest jump since 2020. I know that this is a technology show and that many executives on it are very disciplined about talking about the stock, but the market's rewarding you here. What do you make of it?
Look, I think we're making steady progress, right? And we're not necessarily focused on like the day-to-day movement of the stock price. I think this is the long game that we're fundamentally playing here, and I think the age of AI is going to play out for a long time to come. That's what we're excited about. How can we deliver for customers in a very personalized way? Again, using communications plus contextual data plus AI to deliver those amazing consumer outcomes.
Twilio CEO Khozema Shipchandler, thanks for joining us today on The Numbers. Meanwhile, there are so many more numbers to be looking at. Roblox having its earnings. We're up 17%. Best move we've had in at least a year, and this is they beat analyst expectations. They're boosting their guidance. They're reporting $1.1 billion in bookings, a 34% increase. And their user base surged, 88.9 million daily active users. Of course, still all eyes on some of those numbers being analyzed by short sellers. From New York, from San Francisco, this is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. In terms of earnings and markets, Cara, I'm going to go to some of the crypto-related stocks because there's a lot to fit in. So Coinbase missed estimates essentially in the quarter gone. And what they're talking about is we're entering election week. There is volatility in crypto assets and markets tied to that, but it's not really clear whether they're going to benefit or not. We'll continue to track it. MicroStrategy, again, it's a name that holds Bitcoin in particular on its balance sheet and has pledged to buy more Bitcoin, but saw a loss in the quarter. Well, one of the first companies to do that, by the way. And when we think about Bitcoin, volatility, yes, but still above $70,000 per token, then there's the mega caps, much to discuss with them.
Yeah. So much on the mega caps. Let's talk about Microsoft earnings. We want to get back to it because it underwhelmed. The forecast for growth from Azure, perhaps letting the market down somewhat in terms of growth. But Microsoft CEO Satya Nadella is continuing to talk up the company's AI business on the earnings call, at least. Just take a listen.
All up, our AI business is on track to surpass an annual revenue run rate of $10 billion next quarter, which will make it the fastest business in our history to reach this milestone.
He's got big talk. Let's analyze it with Bloomberg Intelligence senior analyst Mandeep Singh. Microsoft is such an interesting one because the quarter looked great. They're seeing Azure growth back at 34%, but then the forecast was a little bit weaker. And it seems to be capacity that's limited here. Yeah. What do you make of it?
Well, so look at the Google Cloud growth. And all these vendors are growing. You know, the core business is growing north of 20% when you take out the AI element. In the case of Google Cloud, we saw the growth accelerate to 35%, and that was all powered by AI. In the case of Microsoft, they did some resegmenting, so they took out some portion. And it's not a very clean number to see, okay, AI contribution was 12 percentage points. And that's where, whether it's behind Google Cloud, it's not very clear because of the resegmenting. But net, they called out GPU supply shortages when your CapEx is growing up 50%. And that's where you have to ask yourself, what is the CapEx being spent on then? If you don't have enough GPUs, are they spending more on facilities? And it's hard to parse that out. But Google didn't call that out. So, it'll be interesting to see what Amazon does tonight in terms of, their NVIDIA allocation and how they are framing, the capacity shortages when it comes to the advanced accelerators. But that's what it comes down to is how much capacity do you have available for external use versus what is OpenAI consuming internally for training?
A lot of that is geared towards the enterprise business, right, Mandeep? And with Microsoft, this is a company that's been wonderful at selling software to consumers as well, particularly software that sometimes you can get for free on other platforms. Did you get any sense of the trajectory of consumer adoption for these kind of AI-improved Office 365 and products like that?
I mean, very unlikely. I don't think they want to focus on consumer right now because the enterprise opportunity is so big. And they called out, separate products, Copilot Studio, Agent Studio. So they are creating, that bundle that Microsoft is so good at selling. And I'm sure they'll get a lot of traction. But in terms of separate AI contribution, which is what I think Meta got penalized for last night, is not having that separate AI contribution, even though it's getting reflected in their family of apps. That's what investors are focused on because the CapEx increases are so big and these companies keep calling out scaling laws. So, you have to find that ceiling. How much will that CapEx keep going up?
Need the transparency. You help bring it. Bloomberg Intelligence senior analyst Mandeep Singh. Coming up, tech billionaires. They're continuing to throw their weight in the US election. As the D-Day approaches, we speak with Reid Hoffman. That's next. Ed, what are you looking at?
Let's go back to earnings. I mean, there is so much going on. You did such a great job summarizing Roblox, for example, but what a gain that is. And again, the context that they're showing growth in user and financials, but also, putting to rest some of the concerns of the short sellers. Amazon, Apple after the bell. Amazon, a cloud story. Apple, iPhone 16's everything. This is Bloomberg Technology. As the election approaches, leading voices in technology and the venture capital industry on both sides are throwing their weight behind their preferred candidates, like Elon Musk, appearing at a Donald Trump rally just this past weekend. Today on Bloomberg Technology, we're going to speak with Reid Hoffman. You perhaps know him best as the co-founder of LinkedIn, but the billionaire and investor is also part of a group of Silicon Valley investors that are immersed in this presidential election, rallying behind his or their favorite candidate in the race, Kamala Harris. Reid Hoffman joins us now. And Reid, thank you for your time in coming on Bloomberg Technology. The pitch and the pledge was to keep this focused on tech. So I would like to ask you, why is Kamala Harris the best candidate for the technology industry and venture capitalists around the US?
Well, so what the tech industry needs is kind of a stable environment in order to, kind of follow the rules and prosper in. An ability, because, by the way, one of the things that the tech industry brings to the U.S. is it's one of our most successful global industries, where most of, for example, the large tech companies get the vast majority of their revenues overseas, like the majority, and depends on the business. And so good global relations, in addition to stability, and an ability to kind of know that you're following a rule of law versus what I think of as grifter capitalism. All of that leads to, the reason why I and others like me support Vice President Harris for president, because I think those are the more fundamental things than, whether or not a corporate tax rate goes up or down a little. Obviously, those can be important in other times for business. But that's the reason why I think within the technology industry, I think it's a fairly clear choice.
Reid, we recently had SEC Chair Gary Gensler on the program. And a part of the conversation for both candidates is continuity at the FTC and the SEC. You've actually spoken publicly, I think, about both already. But what is your latest position on those two roles, Lina Khan and Gary Gensler, if Kamala Harris were to continue in the White House due to their impact on the technology industry?
Well, let's see. So first, since I've spoken, because I get asked a lot about Lina Khan, I've spoken more about Lina Khan. One misconception to clear up is I've never, ever talked to Kamala Harris or anyone in the White House about Lina Khan for this. So this is entirely a press set of stories where I'm asked about my point of view. And I think she's done a very good job on a number of things. The anti-compete stuff, the click to cancel and subscriptions, a number of things. On M&A, speaking as a partner at Greylock and as a Silicon Valley person who invests in companies trying to create the next generation of large tech companies, her, kind of like waging war on M&A is actually, in fact, as unhelpful to the tech industry. It actually accomplishes something different than what she thinks she's accomplishing. She thinks she's trying to accomplish the kind of the limitation of the growth of the large tech companies. And actually, in fact, she's causing a lack of funding for any of the companies that might potentially compete with them. And so that's a different thing. And that's the Lina Khan, which I still have the same point of view. And I've asked about it from anyone from an expertise point of view. I will continue to say that. Gary Gensler, I think the question, and I know Gary, I've talked to him from the MIT days, is how do you kind of shift kind of a kind of approach to crypto that's less kind of hit with stick and more of a, here's the set of rules that we could set out that would create a beneficial technological investment that helps U.S. position globally. And I think it's been uneven. And so I would hope that, Vice President Harris, who grew up within the California tech community, understands the importance of this kind of rule of law, kind of equal basis, innovation economy. She talked about, kind of innovation opportunities. She's the only presidential candidate in U.S. history who's spoken about the importance of founders. And so I hope that she would bring a kind of a more innovation forward point of view here and, would anticipate that.
An innovation forward perspective, is that the key difference that you anticipate if hypothetically we had a Harris administration, a difference from the current Biden administration, or where else might she differ?
Well, I think so she has always brought a certain, because talked to her over the years in this, intellectual curiosity to what's going on in the tech industry, how that can help everyday Americans, how that can help the rest of American industry. And so it's kind of like, look, I realize that the tech industry is about innovation and building new things, and those building of new things are new products and services, but there are also ways that can help all of America. And those are the questions that she's asked. Now, Biden, who has done a number of great things in his presidency, he's controlled inflation better than, post-COVID than any other, kind of first world country in doing that, and I think has done a number of very good things. But he has not been as engaged with the tech industry, whereas I think, Vice President Harris, including, kind of in her very acceptance speech, has been. And so I think that kind of how do we engage in the conversation? I mean, look, for example, what she did in the artificial intelligence, regulation and executive order process. She ran that. First thing she did is she brought all the companies into the White House to say, hey, we really need you guys to be going foot forward on safety and regulation. What kinds of things can you voluntarily commit to? I talked to the folks who were there. She pushed them very hard on that. Then she looked at, okay, so this is what they can commit to. Here's what we can put into an executive order law. Here's what we can do to ongoing monitor what happened and leave room for innovation. That's what I expect across her approach in the entire technology industry with AI as the instance of it.
Let's go to the other hypothetical, because she's engaging at the moment with the tech community. But many would say that Trump is very much engaging with the technology community with the amount that he's having Elon Musk on stage. If we see Musk taking a bigger role within a future administration, what does that mean for you and ultimately for the relationship that Silicon Valley has with Elon Musk?
Well, I think it depends on what the Trump administration, what Elon does. I think, the Trump, Trump in Trump presidency one, his early presidency has shown a certain amount of grifter capitalism. It's like trying to penalize his opponents using the instruments of state. Obviously, we saw that happen with Amazon, which probably is, no inside knowledge, but probably correlated with Bezos's, forbidding the Washington Post from issuing a support statement. And so it's kind of like if you're going to be individual company retaliatory, it's part of what might underlie a tariffs regime is I can choose like who I'm doling out favors to. That does not create a good, stable environment for investing in, how do you invest in an overall industry and ecosystem? And so then the question, would come down with Elon. Obviously, Elon's businesses have great ties to government. I mean, the whole space business is deeply tied to regulation and kind of government contracts. Automobiles is also tied to a bunch of regulatory frameworks. Obviously, what's going on with media and information has ties there too. And I think, unfortunately, X.com is the primary supporter of conspiracy theories and other kinds of things, which is a serious problem. All of that, the question is all right, well, does it continue to be grifter capitalism, which is calling out to specific companies, or is it rule of law?
Reid, on the X and conspiracy theories, Bloomberg did a deep report, a data-based piece of investigative journalism on that recently. And in that segment on the show, which you can find on YouTube, we gave X's point of view, which is that they disagree with that. And if you allow me to, I've invited Elon Musk onto this program many times, and you are here and he's not. Something's different in this election. You're a well-known person in the world of technology, but there are others on both sides who are speaking out, in my experience, more prominently than previously. Have there been any negative consequences of that? For example, if you are a venture capitalist or a CEO, that publicly speaking about your political orientation and your support of a candidate has resulted in a loss of opportunity in deals or whatever it may be?
Well, I've seen, and I think this in something that's this fraught. I don't think it's just retaliation in business circumstances from folks who are supporting Trump. Like I saw, when VCs were speaking out, some LPs were very supportive of Trump, not at Greylock in this, but in other firms, withdrew their support from the venture firms. I've seen other kinds of things where, people, business relationships have soured because of it, which I think is very unfortunate. I mean, I actually think that part of what we should aspire to as Americans and as business people is to kind of say, hey, look, what we should do is say, what's the thing that we do to make American business and American industry better? And I've heard of Republican senators trash talking me internationally, where you think they'd be supportive of American business people. So I think that there are consequences of it, which I think is unfortunate. But I think it's more important to be patriotic about what is good for America, American industry, and American society, even when you have this fear.
Let's talking about the souring of certain relationships. The first one that comes to my mind is the souring of the relationship of who was a co-founder of OpenAI, Elon Musk, and now OpenAI more explicitly in its new form. Have you spoken to Sam Altman about, and indeed OpenAI, about the worries of Elon Musk, who seems to have a dislike for the business? If he took a more prominent role within the administration, what would it look like for AI more broadly to have Elon Musk in a position of power?
Well, one of the things that I would worry about if Elon took a more prominent role is that he would view that the only real success for the AI industry is if he is doing it. I mean, this is part of the question around the fact that he's kind of doing these baseless lawsuits against OpenAI. That are, well, I gave money philanthropically and I should get a cut what then turns into commercial, which is, by the way, illegal, right? And so, so that kind of issue might then rear its head in this kind of tradition of, kind of Trump's grifter capitalism. I would hope that actually, in fact, if Elon were to accept a role, that he would go, look, what I care about is all of, the tech sector, American industry, not just my own efforts. And I think we'd have to see what would play out then.
The latest on the litigation between the two, I believe, was October 8th, when OpenAI accused Elon Musk of harassment in that legal fight. And again, we've covered it on this program, Reid, and we'll go back to it. Is AI and regulation of AI being discussed enough in this election by either candidate?
Well, I'm not sure that it's the most central thing for kind of the general American society at the moment. Look, I think how we get the benefits of AI for American industry, American society, American consumers, I think is really important. And one of the things about regulation is it tends to slow down innovation. It tends to delay. And I think our tools for getting a medical assistant on every smartphone, a tutor on every smartphone for every American, and maybe even more globally, I think those are the important things to be trying to get to. And that's less of a discussion about, AI in the election, but more kind of we should be building towards the future.
Reid, if former President Trump were to get a second term in office, how are you preparing for that, and how do you approach it were that to be the case?
Well, if that's the case, then I would hope for the folks who have argued to me that, you shouldn't actually, in fact, take President Trump's words seriously, that the fact that he is declaring like a tariff war where he can do individual kind of grifter capitalism, that's actually not what he's going to do, that he's going to try to be more business forward, more technology forward, and you should not be paying attention to what his words are. I would hope that they would be correct. If it ends up being what I fear, which is actually, in fact, a kind of an individual kind of like sweating various businesses for his own kind of political favor, I think that will affect American industry in a way that will affect American prosperity. And so I think you build in more resilience to chaos and uncertainty, and that's what you would do. I'm obviously very hopeful that Vice President Harris will win the election, and so therefore haven't done enormous contingency planning yet.
We want to thank you so much for your perspective today, as you do indeed back Vice President Harris for the administration of the future. Greylock partner Reid Hoffman, we appreciate it. Ed.
Okay, today's big take focuses on how Amazon is working to make its Alexa devices a force in artificial intelligence. CEO Andy Jassy is eager to take on ChatGPT with the voice assistant that Amazon claims is in 1/4 of US households. But technical challenges are slowing the company down. Bloomberg's Austin Carr co-wrote the big take. We are an Alexa household, but I'm using ChatGPT 4.0 voice input so much more, Meta AI through the Ray-Ban glasses. It's an incredible dissection of the struggle Amazon is having bringing Alexa into that field.
Yeah, it's pretty wild. I mean, just think it's been already almost 2 years since ChatGPT launched. Meanwhile, Microsoft, Google, even Apple have rolled out a lot of AI tools. And yet we haven't really seen anything from Amazon, despite them having more than a decade lead in the chatbot space. They're in 500 million some households with their devices, but they've been struggling to move that old Alexa brain to sort of a new LLM, large language model approach. And they've been dealing internally, based on the sources we're talking to, with tons of hallucinations, with struggles with basic tasks the old Alexa used to be good at, like turning on and off lights. And it's been really fascinating to watch this company that is, famous for data infrastructure, for cloud computing with AWS and with Alexa, really fall behind in this AI war. And there's a lot of questions among the sources we talk to over whether or not they'll be able to catch up.
What's so great about the way you write is you make it interesting and personal. We all know Andy Jassy, of course, the leader of Amazon, is a big sports fan. And you talk about how he keeps prodding the Alexa with sports questions, and it just hallucinates in that respect, particularly about up-to-the-moment results. What, therefore, are we seeing in terms of further investment? What are we seeing in terms of eventual rollout?
It's TBD at this point, but our sources are indicating that it's actually been repeatedly pushed back. There was an early target in early 2024, then it was moved back month by month. Most recently in October, they were hoping to launch it. They scrapped that event and they've replaced it with a smaller Kindle rollout. So sources are telling us this could actually be their target deadline is being kicked back into 2025, which really puts them behind the ball. But again, it's all these technical challenges they're facing. It's not a matter of necessarily bureaucracy or some lack of overall goal. They're really marshaling the troops toward this, and they're really running into challenges with, again, making sure sort of an LLM can do basic tasks like, all this the tasks that you asked it to do around your home. LLMs are actually not particularly good at that. And with the hallucinations, with all these devices in homes of families and kids, you don't want it spewing off sort of information that's provocative or scandalous. That can be a really reputational, cause a lot of reputational damage for Amazon and the Alexa brand.
There's this great academic debate we could have, but we don't have time, about the best hardware form factor to use AI models in the voice assistant form. The other bit of news is there is a timeline delay into 2025, right? Just tell us what you understand the team is working to at Amazon to get this into the real world.
So the big challenge right now is merging that old brain with the new brain. There's a lot of argument about whether they should just scrap the old Amazon approach and move to the sort of an LLM model that ChatGPT and Meta are using. But they're trying to do this hybrid approach, and that takes a lot of custom code to make sure, when I ask it to do a request, it can deliver that. It knows my permissions. It knows that I have access to this light bulb or this kitchen timer or this microwave. And that's the irony, is that all the stuff that Amazon Alexa is actually really good at are very simple tasks, and that's what LLMs are not particularly adept at.
Bloomberg's Austin Carr, it's a great read. Thank you for bringing it to us. Meanwhile, that does it for this edition of Bloomberg Technology. And Ed, we've got earnings like Amazon after the bell, but an important conversation coming up tomorrow.
Yeah, today the Democratic perspective, tomorrow the Republican. Vivek Ramaswamy, a surrogate or backer or booster for Trump, will be on the program to give his take on the technology discussion to be had for either candidate. But you should recap on the podcast. It was a packed show. It was crazy. You know where to find it. Kara and the team in New York, everyone here in SF. Wow, this was a great Bloomberg Technology.